Hey, how's it going? Anmol here. So listen, today I got a really important video for you. This video is either going to make or break your trading career, right? This is called Do Not Use Your Brain, and why your brain, your thinking, is actually costing you your trading profits and the trading career that you desire, right? So this is going to be a really important video. Make sure you take a lot of notes. Make sure you pay attention, because I'm telling you, this is going to be the most important trading video that you're ever going to watch. This is the biggest realization I've had in 10 years of my trading, and this is the kind of talks that I go and give when I speak at proprietary trading firms, when other trading firms invite me. I even spoke about this at university in London, which I'm actually going to be here again in March. So again, I know I haven't made a lot of videos for you, but my goal was, when I do make a video, I want it to really impact and really improve your trading, even by just a little bit. But this one's going to be the biggest difference maker between those who make money and those who make a little bit money and those who break even. All right. So before I dive into the video, I really want to talk about some of the trading cliches. And I know Jared touched upon this in the past video, but it's really important, right? There's some trading cliches that we need to unlearn as traders, right? Because every one of us grows up as a trader reading books, watching courses, maybe seminars, videos on YouTube, and there's a lot of misinformation out there, right? People say things like, let your profits run, cut your losses short. Okay, sounds great, but what does that mean? How much do I let it run? Do I let it run forever? Right? You have to really define things, right? And then the number two thing people talk about is, oh, never let your winner turn into a loser. Come on, that's exactly how you're gonna lose and remain a break-even trader. And then the other thing, you can't go broke taking profits. Guess what? You might not go broke taking profits, but you're not gonna get rich taking small profits either. So again, we need to unlearn these things, and I'm gonna unpack all of this. And I have made slideshows for you this time. As you guys know, I'm not a big fan of slideshows, because when I go out and speak at trading firms, conferences, or maybe a proprietary trading firm brings me out there to speak to their traders, I go and have a chat, right? We take a look at spreadsheets, we look at the trading, we sit and we talk. We don't really look at slideshows, but I do know that people like to learn visually on slides, so I did make some slides for you, and I really, really hope you like it. But again, at the end of the video, I want you guys to like this video, right? Comment and let me know what you thought, and if some of these pitfalls are pitfalls that you fell into, right? And how this video maybe kind of triggered that light bulb moment, right? That aha moment for you. I hope this really helps you, right? I hope this triggers the video for you. Again, I'm going to pick a few winners, so let me know what you thought in the comments box below. And I'm going to send a few t-shirts out which says Trade Your Plan. Trade Your Plan is the most important thing ever. So I'm going to send a few t-shirts out. Comment below, let me know what you thought. And again, let's dive into the slideshow. Let's get straight to it. Today's topic is don't use your brain. Why your thinking is costing you money. So before I move on to the topic at hand today, I want to first dispel some of the trading myths, right? People say buy low, sell high. Okay, sounds good, buy low, sell high. But if everybody knew how to buy low and sell high, wouldn't everybody make money? Wouldn't everybody be rich, right? Buy low, sell high sounds great, but how? How do you know when to buy low? How do you know when to sell high? What is high? What is low, right? We don't know. So that, please throw it out of the window. Then people say, go break even as quickly as possible. Never let your winner turn into a loser. And I'm going to show you how that exact saying is what's costing you money, costing you being a profitable trader. Most of you guys are already good at technicals. You know the charts. You can easily identify a pullback. You can identify a breakout. So you're good with charts. How you manage your trade, your thinking is costing you money. And I'm going to illustrate that today with some examples, right? Then people also say you can't go broke taking profits, That is exactly how you go broke, right? If you might not go broke taking profits, but guess what? You're never going to get rich. You're going to be a break-even trader, because if you keep taking small profits, but one loser can wipe away your winners, then that's not going to work out, is it? So again, please, this is a surefire way to remain a break-even trader. I know a lot of you guys, I get your emails. I hear your pain in your voice, in your emails. Through the emails, I can sense your pain when you say, Anmol, I've been trading for XYZ time, and guess what? I'm actually right on my trades. My stocks end up doing exactly what I expect them to do, but somehow I didn't make any money on it. I know, right? I've spoken to numerous trading firms that succeed. So please, unlearn this as soon as possible, okay? So, after 10 years of trading and, 5 years of coaching and training others, the biggest issues I saw working with individual traders and being asked to speak at proprietary trading firms and other trading firms that I've gone to and given speeches and talks at, one of the biggest reasons that I saw that people who were not making money, here are some of the 4 points, right? Number one, they didn't have a set rule or fixed way of managing their trade. Meaning, when they get into a trade, they don't know when they're going to get out or how they're going to get out. They're making it up as they go. They're making their rules up as they go. Oh, this looks like it's extended. Let me take a profit. Oh shit, it went up. It would have hit my target. Or oh, this looks like it didn't get enough volume. This is not a good breakout. This is not a good break. Let me get out some shares here. Let me go break even. And guess what? It ends up going to the target anyway. So they manage it differently on every time. Sometimes they're holding a trade. They think it's going to go higher. Sometimes they're getting out too quickly. So they're doing random things and expecting their results to be consistent. But guess what? If you're going to do random things, your results are also going to be random. So, they did too much thinking while they were in the trade, meaning they're not doing enough thinking before they take the trade, but then when they take the trade, they're always constantly watching that stock. They just can't let it go. They're looking at their screen, staring at their screen, trying to make something happen, right? And often by their thinking, right, by listening to that idiot inside your ears, between your ears, they're actually messing up that trade, which was a perfectly fine trade to begin with. Their thinking messes that trade up. So, and that reason that happens is because they did not have enough faith in their trading plan or their management strategy. And often that is because of lack of back testing and lack of testing and tracking your trades, right? And, a lot of traders that I meet, they're actually deep down a winning trader, but their psychology, their mindset, right? Them listening to these typical trading cliches results them in losing money. So please unlearn this as soon as possible, right? I'm going to tell you, the number one reason people lose money is A, either they don't have a trading plan, or B, they have a trading plan but they don't follow it, or C, they're doing different things on different trades. And again, you guys don't need to let me know. You guys ask yourself that question. Comment below and let me know. Do you manage your trade differently? So some days you're taking it off at 1-to-1. Some days you're raising your stop to break even. Next day you're managing based on a pivot. Next day you're saying, well, if it keeps riding this moving average, I'll hold it. Next day you're like, this one's going to go much higher. I'm going to hold this trade. So every trade is different. So again, if you do different things, how can you expect a consistent trading plan? You can, right? Trading is a game of statistical probability. That is it. No debates about it, right? Statistical probability. But if you don't have any statistics, or you don't listen to your statistics, or you don't follow a strategy to let the statistics play out, it's never going to work, right? Definition of insanity is what? Doing the same thing over and over, expecting a different results. So please stop doing and stop messing about with your trades. Stop thinking, okay? So unlearn these things as soon as possible, right? And again, a great book if you've read it, Reminiscence of a Stock Operator, great book. It was written a long time ago, so it doesn't, really apply to today's markets. But there are some sayings that I took screenshots of that I really love. So here's a snippet from that book. I sometimes think that speculation must be an unnatural sort of business because I find that the average speculator has arrayed against him his own nature. The weakness that all men are prone to are fatal to success in speculation. Again, goes exactly to show the point. You're thinking. Right? Your own nature is what's costing you money. Another one, fear keeps you from making as much money as you ought to. The successful trader has to fight these two deep-seated instincts. He has to reverse what you might call his natural impulses. Instead of hoping, he must fear. Instead of fearing, he must hope. He must fear that his loss may develop into a much bigger loss and hope that his profit may become a bigger profit. It is absolutely wrong to gamble in stocks the way the average man does. Now, I'm going to go into a slide which is going to be freaking important, right? And again, let me know in the comments if this is something that you have noticed in your trades, something that you have done. I already know the answer. A lot of you guys have done this. That's why I have this slide in there. So let's go to the slides. This is how most novice traders manage their trades, right? They're looking at the stock, it's going up, 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 nicely going up, right? Then they're looking to buy this bull, this bull flag, or they're looking to buy this buy setup, this pullback into 50% retracement. They get a nice doji candle. They put their order to buy it above here. They put their stop loss down there, and boom, the trade starts moving in your favor exactly as we planned, right? Guess what? Never let your winner turn into a loser, right? Oh, I'm up 1-to-1. Let me go break even. Guess what? They raise their stop loss to break even. Stock comes down, pulls back. They exited at break even, and then the stock pivots and goes right back up, right? The trade goes to target without you. Let me know. Has anybody noticed that? I have. When I started, this is exactly how I managed to trade. So your thinking cost you money. If you just maintained your original stop loss and let the trade go to your target, you would have actually got that target, right? But here's what happens. People will say, hey, let's go to break even, right? You can't go broke taking profits. You can't go broke taking profits. You don't let your winner turn into a loser. Let me go break even as quickly. All these trading cliches, they do that. They go break even. Why? Because it makes them feel comfortable. Guys, you want to feel comfortable or you want to make money? You have to choose. I'm just going to come out and flat say it. You have to choose. You want to make money or you want to be comfortable? You want to be comfortable? This is not the business for you, right? You want to make money? Stick to your trading plan, okay? As simple as that. I'm not messing around with this topic. Really important topic. I've worked with hundreds and thousands of traders, even proprietary trading firms in New York that fly me out to speak to their traders. Number one thing I've noticed is that they want to protect something that is not yours yet, right? A trade, a profit is only your profit when the trade is closed. If it's not closed, it's not your profit, okay? So please, ride your trade into target. Follow your trading plan, okay? And, here's a way some people trade breakouts, right? When they're trading breakouts, they're like, oh, Anmol, look at this nice base, nice consolidation, nice wedge pattern, nice bull flag breakout. Boom, they buy the breakout right here. Stock goes in their favor. And maybe they say, ooh, it didn't get enough volume, right? They start thinking, ooh, it didn't get enough volume. Ooh, that's not a good break. Or, hey, I'm in profit now. Let me go break even. They go break even. Stock comes down, right? Gets them out at break even, pivots, and goes right back up to target without them. But what they forget is basic technical analysis, right? And we teach this in the PTS course. A breakout rarely goes like this and just keeps going. It happens, but not always, right? A lot of time, breakouts are meant to break out, then they're meant to pull back to that breakout level. That breakout level acts as support, and then the stock goes higher. This is what we teach in PTS, right? This is buy point number 1 when it breaks out, buy point number 2 on the pullback, and then buy point number 3 is actually the point where you take profit, right? Most people, they get that initial spike in their favor, they go break even, and the stock pulls back as it should and goes and hits your target without you. What you forget is that pullback is actually an opportunity for you to buy. That's a buy setup. You put your stop loss there and your stock goes higher. Because guess what? All the stock is doing, when you raise your stop to break even and you get out, you forget that all the stock is doing is riding an uptrend line. What does the uptrend line do? Stocks do this, right? That's all that its stock did. Stock went up, right? Pulled back to the uptrend line and continued its uptrend. It's probably going to do it again like that, right? So that is what stocks are meant to do. Stocks don't go up in a straight line. Sometimes they might, right? But not always. 90% of the time they won't. Stocks ebb and flow. That's the natural ebb and flow of the market. Ebb and flow, right? Stock goes up, pulls back, goes up, pulls back. And then that's how an uptrend is formed. So it is supposed to pull back, but most traders raise their stop to break even, they get out, and then the trade goes to the target. So they were right on their analysis, they were right on their stock pick, but they just didn't make any money off it, right? Again, let me know in the comments if that's true, if anybody has ever done that. I know you have, so don't lie, comment below. All right, so how to fix this problem? So Anmol, all this talk is great. How do I actually fix this problem? There's many different ways to fix this problem, right? I'm going to give you 10 points. 10-point solution to fix this problem once and for all and ensure that you actually make the trading profits that you deserve. So number 1, test different ways to manage your trades. Hey, what if I take all my trades off at 1-to-1? Hey, what if I take all my trades off at 2-to-1? So either it goes 2-to-1 or I take a stop loss, right? What if I manage my trade to 3-to-1? Again, whatever suits you, you track, right? Maybe some people want to track, hey, if I keep raising my stop every 5-minute candles low, that's fine too. Hey, what if I keep riding the 9 EMA? That's fine too. Hey, what if the stock goes 2-to-1 in my favor? I raise my stop to break even, then I look for 3-to-1 again. Whatever you want to track, fine. Pick 3 to 5 different managements. That's what you're going to test. Now, minimum of 3 months or minimum of 100 trades, you're going to keep a log of your trades, right? Preferably 6 months. Now, test how you would have done using different methods. What was your total P&L over 3 months if you just took all your trades at 1-to-1? What was your P&L if you took all your trades at 2-to-1? What if your P&L was based on what you're actually doing, right? So compare yourself to what the 2 to 1 or 1 to 1 is doing, right? So what did you actually make or lose versus what 2 to 1 made or lose? Compare that, right? Now, accept the risk before you put on the trade. So once you've put on the trade, think of your money is gone, right? You've already accepted that risk. So if you already accept that risk and accept that the trade is a losing trade, or accept that that money is gone, right? Then you're less fearful. Most people are too fearful. That's why you go break even really quickly. That's why you raise your stop really quickly. Get rid of the fear. Accept that loss, accept that fear before you get into the trade. Your stop loss is there for a reason. So when people say, cut your losses short, that does not mean that you're in a winning trade, it's pulling back, ooh, I'm going to just cut my losses short. Your stop loss is the point where you cut the losses short. That is what the stop loss does. A stop loss in its own is an insurance that, hey, that's cut the losses short, right? So don't raise your stop loss, because if you're raising your stop loss, you're not cutting that losses short, right? You're actually cutting your winners short by raising your stop loss. So keep your stop loss where it is. That ensures that you're taking a predefined loss. Now, stop preventing, right? Stop actually the market's ebb and flows influence your trading decisions, right? Trust the statistics. Once you are in the trade, simply follow your trading plan that you have already tested, right? Already tested. Again, without testing, don't try and do this, because you have to test, right? You're a trader. Professional traders test, because think about it, right? There's people from proprietary trading firms, traders for Goldman Sachs, big banks, big traders like me. How do you expect to compete with us if you're not doing the homework that I'm doing? How do you expect to compete in the marketplace if you're not doing the back testing, the tracking that professionals like us are doing? You can't just come into trading and try and beat the business, right? You might get lucky, but if you want to do this as a career that I've been doing for 10 years, you have to treat it like a business, right? What does a business do? A business collects receipts, right? Hey, Amazon collects receipts, right? Amazon collects, hey, which product sells the most? That's the one they display it to you, right? So that's all data. Data is key. Data is important, right? Ask Facebook, right? Data is really important for them too. So data is key to making decisions. You have to make intelligent decisions based on data. Please do not make trading decisions or your trading plan decision based on your emotions or what's comfortable to you, right? Data is the only key, because guess what? I can lie to you. Your friends can lie to you. Anybody else you watching videos, they can lie to you. One thing that will never lie to you is hardcore numbers on a spreadsheet, okay? That is a fact. So again, once you have taken that trade, simply follow your trading plan that you've already back tested. Do not watch your trades once you have taken them, right? Meaning a lot of people take a trade and then they're just sitting there biting their nails. Ooh, this looks like it's going to do. They're watching the trade. And guess what? The more you watch your trade, the more you watch every little tick of the stock, you're going to get tempted. We're all human, guys. We're all human. None of us are robots. You're going to get influenced. You're going to get tempted. You're going to do something stupid. Don't do something stupid, all right? Keep it simple. Don't watch your trades once you're in them. Do all your thinking before you have taken the trade, not after, not in between the trade. Do all your thinking before you take the trade, not while you're in the trade. And again, get yourself to be able to trust your trading plan and follow it. It's as simple as that, right? Put a picture of whatever your favorite car is or your house. Put a picture of a crappy car, right? When you break your trading plan, this is what you're going to get, right? When you follow your trading plan, this is what you're going to get. Make a vision board, put it up there, always look at it, right? So one line I want you to remember, write it down. Short-term temptation versus long-term gain. Most people go for that short-term instant gratification. Short-term temptation. Ooh, I'm up $100 here. Let me take it. Boom. I feel good. I take my $100. They forget the long-term gain. They just missed out on $200. Right? And they keep doing that on every single trade. And over a series of 100 trades, your small profits and what you left on the table, that really adds up. That makes the whole difference. And I'm going to show you that here in a little bit. So how do you track the trades? Here's how you track the trades. Simple. You can take out a piece of notepad, right? Take out a piece of paper, take out a notepad, or just open up a spreadsheet and write it down. So this is, again, something that I tracked and some of my students tracked. I gave this exercise to my student. He tracked it. So he wrote down in one column, what if I took all my trades at 3 hours? So either it hits 3 to 1 or I stop out. There's no in between. What if I did 2 to 1? What if I did 1-to-1 and he tracked all his trades here, right? And you will notice at the end of about 107 trades or something, look at the totals. So this is based on $300 risk. If he was risking $300 a trade, look at the difference. If he did 3-to-1 on all the trades after about 2 or 3 months, right, he would have made 38.94R, right? But he was doing 1-to-1 because he was getting a little bit skeptical. Guess what he made? 5R. So yes, he's still profitable, but look at the difference, right? Look at that difference. If he did 3-to-1, he made 38.9R. If he did 2-to-1, he made 36 Rs. If he did 1-to-1, he made 5R. That's crazy, right? And here's another thing I want you to notice. But he was like, Anmol, that 1-to-1 has 52% win rate. The other ones only have like 38%, 40%. But does that really matter? Look at this. This 3-to-1 had the lowest win rate, right? Out of 107 trades, he lost 66 and only won 41%, 41 of the trades. So his win rate was 38%. But guess what? From a 38% win rate, right? 38% win rate. His P&L over those number of trades was $11,682. But guess what? He was doing 1-to-1 because that had the highest win rate. So 1-to-1 had a 52% win rate. Okay, so he took a lot of trades. 56 were winners, 51 were losers, right? But guess what? His total P&L was 1,515. So the lowest win rate got the highest profit, and the highest win rate got the lowest profit. What does that tell you? That tells you that win rate doesn't mean anything on its own, right? It's all about how much are you capturing on those winners, right? And how much are you missing out? So as you can see here, illustrate, this is what I want you guys to do. This is your homework, right? This is the kind of exercise that I give my coaching students. This is the same kind of exercise that I give when I go out to speak at different trading firms and different proprietary trading firms. This is the exact same exercise that I give everybody. Hey, all I want you to do is track your trades, right? Like this, in this format, 3 to 5 different ways of managing it. Track it, and guess what? We'll meet in about 3 months. I'll come back and check up on you in 3 months, and I want to see this spreadsheet. If you don't have spreadsheet, guess what? You're fired. You're not going to be my client. I'm not going to work with you, right? If you have the spreadsheet, pretty much after 3 months, I can easily fix a problem for most traders. Is simply by doing this exercise. 90% of the traders do this exercise and their issues are fixed, right? 10%, maybe they haven't got their technicals down, and then we dive deeper and take a look at the exact trades to figure out their technical problems. But again, I'm telling you, most of the traders who've taken courses, they have a system and they're not making money, or maybe they're making money but not as much as they would like to. This is the difference maker, right? Is that either they're taking the profits too quickly, right? Or they're not following it. So here's another key I want to mention. So this is what that trader would have made in about 2 months per time, right? Following this 3-to-1. But guess what? Let's say he uses his brain. Ooh, I know my target's 3-to-1, but looks like this trade is going to pull back. Let me go break even, right? Let me go break even. Guess what? He goes break even, right? He goes break even. He's out break even, and the trade hits 3-to-1, right? Then he does it again. Ooh, that's a nice breakout, but you know what? It's a nice break. I'm going to go break even. I'm going to raise my stop under the entry candle's low. Raise the stop. He's out break even. He missed out here again on that 3-to-1. So your thinking is costing you money. How you make money, again, I don't want anybody to debate with me on this because, again, you prove me wrong. You prove me wrong. You tell me your statistics because I do 2-to-1 personally for me. When I day trade, I do 2-to-1. And I've been making money every single year. I've maybe had one losing month in about, 5 years of trading, right? I had a couple break-even months in between, but over like 5-10 years of trading, I've had 1 or 2 losing months, right? And that's because I just stick to 2-to-1, 2-to-1, 2-to-1. Every winner plus 2, loser minus 1. Every winner plus 2, loser minus 1. Even with a 40% win rate, you're going to be a profitable trader. Again, think about it. Flip the coin, guys. Let's flip the coin. Ding. You flip the coin, either it's heads or tails, right? So you automatically get a 50% win rate. So if every trader automatically has a 50% win rate, right? Because again, when you buy a stock, there's only 2 things that are possible. Either it can go up or either it can go down. So if that's the case, how do people lose? Think about that for a second, right? So it's the coin toss philosophy. So again, that's all the time I have for you guys today. Again, hope you really enjoyed this lesson. I mean, I can't cannot emphasize the importance of this, right? And again, I have 100% success rate for people that I've done one-on-one coaching with. And the reason is, well, if they don't track their trades, they're fired, they're no longer my client. So that automatically weeds out the ones that are never going to make any money. And the ones that I've done coaching with and ones that I've done this exercise, and if they can just follow it, in 6 months' time, you can be a profitable trader, right? Obviously, that assumes that you've already taken, let's say a PTS course or my strategy course, and you've kind of learned the methods. Because once you learn the technicals, once you learn the candlesticks, don't spend more time learning more technicals. It's not going to help. What's going to help is being able to get your mind strong enough to be able to follow it. So again, I really hope you guys enjoyed this lesson. And again, shoot them out there. Let me know your comments. Also, let me know what kind of topics you want to hear from, right? Again, I have various topics that I cover, but mostly when I go out and speak to other trading firms, I'm speaking about psychology. I'm speaking about mindset. That's my expertise. And my expertise is, again, creating a system that you can follow. And again, let me know what you guys want to learn more about. Let me know in the comments, because the reason I don't make videos is because, I don't know what to talk about, right? I mean, everything I know, I talk about in the trading room every single day. But again, if you guys let me know what struggles you're facing, I'll be happy to make a video for you. Let me know what you thought in the comments box below. If you had a light bulb moment, if you had an aha moment, right? Like ding, that buzzer went up in your head. You're like, that's why. Right? I want to hear about it, okay? So take care, everybody, and I'll talk to you guys perhaps in the next video. Those in the trading room, I'll see you guys there.
It's really hard to tell if someone's legit nowadays, especially in trading, but Jared and Amal are just so transparent, and they don't try to hide the BS in trading. They show you.
Absolutely, 100% would I recommend live trading. Courses on gap trading, and this was the most forward class. It went into all the details. It went into areas that a lot of the other courses didn't go into.
I don't know the exact penny, but I tell you, it certainly looks right around there.
Honestly, can't think of a better trading system besides live traders. I've probably gone through 3 systems, and there's a large number of people in the class who have spent over $10,000 on trading systems, and they all have finally found live traders. And
That's what the VWAP, that's when you're triggering in, right? That causes this,
They teach we are real deal situations in every trade. It's not just like a robotic, teaching.